What does it mean to beat the market? This refers to an investor trying to build a custom portfolio that will outperform the S&P 500. You may beat the market sometimes, but you can't beat the market all the time, especially in the long run. So if you can't beat them, you can do this by investing in an S&P 500 Index ETF. But which one is best for your needs? Well, since we live in Canada, Canadian listed ETFs would make more sense for us. So let's check out the best S&P 500 ETFs traded on the TSX. VFV Vanguard S&P 500 Index ETF. Traded since 2012, currently this ETF has a market cap of $6.7 billion, a dividend payout of 1.3%, and an MER fee of 0.09%. This ETF is the second most popular choice for Canadian investors. It basically invests in the VOO ETF, so you don't have the hassle and fees of converting currencies, which is why you should choose a Canadian listed ETF over a US listed one. This ETF's performance, dividend, and MER fee makes this ETF one of the best options for most investors who want broad exposure to US equities. ZSP, BMO S&P 500 Index ETF, which also first started trading in 2012. Currently, this ETF has a market cap of $9.49 billion, a dividend payout of 1.43%, and an MER fee of 0.09%. This ETF is the most popular choice. This might be due to the fact that it's a recognizable company in Canada, BMO, it's probably pushed more by Canadian institutions, and it offers the highest dividend. In the end, this ETF is pretty identical to VFV. It's whether you like BMO more or Jack Bogle's Vanguard. XUS, iShares Core S&P 500 Index ETF. Traded since 2013, this ETF is offered by BlackRock. It currently has a market cap of $4.49 billion, a dividend of 1.37%, and an MER fee of 0.10%. Once again, this ETF is very similar to VFV and ZSP, just offered by a different company. Also, they currently have a higher MER fee and dividends are paid semi-annually instead of quarterly. VSP, Vanguard S&P 500 Index ETF, Canadian dollar hedged. Traded since 2012, currently this ETF has a market cap of $2.54 billion, a dividend payout of 1.38%, and an MER fee of 0.09%. This ETF is the same as VFV, except it's Canadian dollar hedge, meaning this ETF will perform better when the Canadian dollar goes up. This option may be a better choice for short-term investors who believe the Canadian dollar will rise. But historically, Canadian dollar hedge ETFs underperformed. HXS Horizons S&P 500 Index ETF. Traded since 2010, which makes this the oldest ETF on this list. They currently have a market cap of $2.3 billion, an MER fee of 0.10%, and an additional swap fee of 0.10%. This ETF is the only one on this list that doesn't pay a dividend. Let's just say it's invested back into the ETF. This feature makes this ETF more suited for a non-registered account. Since there's no dividend, there's no tax to pay on it. Although this ETF has higher fees and no dividend, it makes up for it with better performance and the tax efficiency. ESG Invesco S&P 500 ESG Index ETF. Traded since 2020, this is the youngest ETF on this list. This ETF currently has a market cap of $120 million, a dividend payout of 1.36%, and an MER fee of 0.16%. This ETF complies with ESG practices, environmental, social, and corporate governance. Because of this mandate, this ETF only holds 305 of the S&P 500 stocks. It's said that ESG investing can negatively affect performance, but since its inception, this ETF has performed slightly better than the S&P 500 index. So if you're an ethical investor, this would be the ETF for you. But first, do your research and be aware of greenwashing. Bonus VOO, Vanguard S&P 500 Index ETF. This ETF is actually listed on the New York Stock Exchange. They first started trading in 2010, and they currently have a market cap of $747.47 billion, which is much larger than its TSX version, a dividend payout of 1.55%, and an MER fee of 0.03%. So why did this US listed ETF make this list? Higher dividend rate, much lower MER fee, and since VOO is US listed, it's protected against the US dividend 15% withholding tax when in an RRSP account. But you'll only come ahead if you convert Canadian dollar to US dollar using Norbit's Gambit or if you use Interactive Brokers. And then again, it may not be worth the hassle unless you have a large portfolio and invest in the long term. These ETFs are your best options if you want exposure to the S&P 500 Index. Another factor in choosing the right one for you is whether your broker offers commission-free trading of the ETF you want. If they don't, you may need to switch to a broker like Wealthsimple, Disnet, or National Bank for commission-free trading. Skip picking individual stocks and consider choosing this passive investment that has a proven track record for positive returns over time.
It has a pretty damn good reputation.
And if you want to diversify more and reduce risk, all you need is a global market index and a bond market index. This portfolio style is called the 3-fund lazy portfolio. If you want to continue learning, check out one of the videos on the right of the screen. Thanks for watching. Until next time, keep making money moves. Peace.